Good morning. It's August 22nd. Ron and I are here today to review several topics with you. I have a license agreement with Ron to utilize his materials. The agreement requires me to share this notice. I do have his written permission to utilize his products in this manner. And here's our standard disclaimer that y'all could probably memorized it by now after all the sessions that we've had. But just to remind you, the information we present today is for educational and informational purposes only and is not advice. It is not to be construed as advice. And this disclaimer covers everything that we talk about today. You and you alone are responsible for how you evaluate and utilize the information that you learn today. Our agenda is to look at the market forecast and see how we're doing year to date, and then um, we'll spend some time looking at Trade Planner. Will hit some highlights on the improvements to Pi Visions. We've already talked about a lot of those, waiting for the meeting to start. And with that, Ron, it's your turn.
Okay, thanks, Tommy. Good morning, everybody.
Morning. Go ahead.
Forecast. Well, what do you think? The market is, continually slowly rising, so it's surprising. We said interest rates would go down. Right now, my feeling is that I don't think anything is going to happen with interest rates. The whole thing is centered around, inflation. And we'll see what happens. But interest rates, we said, would be down, unemployment up, price of oil flat, which is not. Growth rate is flat, weaker dollar, second year of the presidential year, second term, or second second year. Consumer sentiment was flat and AB on the Sedgwick chart. So let's take a look at this forecast. This is our 13 to 14% increase for the year. And if we go to see the actual now, here's where we are based on that forecast. And interesting that, the market goes up above the forecast, and then in a couple of weeks it goes back down. And I mean, over time here, since May, it's been moving around, but it's kind of wiggling around that blue line, which is the forecast. Uh, so I thought, okay, what if we look at the current situation? Right now, I say interest rates are flat. They're not going anywhere. And unemployment is flat. It hasn't gone up. And price of oil has gone up. Okay. And right now, based on what's happening in the Middle East, it probably will stay up for quite a while. This whole business of, oh, it's going to get, price of gas below $4, it may not happen. A lot of things have to change. But look at this, look at the forecast here now, still going up, and the market is kind of following the blue line. So my feeling is that, yeah, we're on this little slightly upturn, 13%, 14 for the year. And even though oil is going to go up a little bit, it really is not going to impact overall that much. So we have the other factors, interest rates flat and unemployment flat, that basically allow the market to continue in its upward trend. So I think the forecast that we have is good. Uh, we'll see what happens by the end of the year, but this is kind of where we think we might end up if we look at the current state of affairs. So we're still in an upcycle. And if we take a look at outlook, where we're currently at, it is basically flat, okay? And there's, what is the momentum? What's going to change this? I mean, earnings, have been reported. It's all centered around, I think, what happens with Iran, and the Strait of Hormuz, because that's going to affect a lot of countries, a lot of world situation, okay, on getting oil. Uh, but they're finding ways to, sneak it by. So, so I think, yeah, it's kind of moving forward where we're currently at. comments, questions?
Ron,
Anybody disagree?
can you remind me what Outlook is? I've been away for a while.
Outlook is the next 50 days, what the S&P 500 will look like. So it's looking at the last 5 years of what's happened during this period of time and saying, okay, the market, has gone up, down every day. It's a daily 50-day movement forward.
Okay,
So it sometimes when it goes down, it gives you kind of a warning saying, okay, watch out, something is happening here, in that particular equity or even the S&P 500. We don't see that yet, but it could be, happening if I think something really bad happens in the Middle East. So so use Outlook as a guide to say, okay, going out forward, what does it look like? Another piece of information, okay, that you can't find anywhere else.
so on that chart, it was the black line, the last chart that you showed.
Okay, we gotta wait for Tommy can bring it back up there.
Yeah, the so
It's
the
actually the blue line. The black line is the
Oh,
actual.
I see. So the
So
blue
the
line
next
okay.
period of time, the outlook period there of 50 days, and it's showing you the 50-day moving average. Right, so it's forecasting fairly flat, down a little bit from where we're at. Okay.
so it's basically a historical daily volatility algorithm. And so it looks at what as Ron was saying, what has been the movement on that particular calendar day in the past. And so it's got a look back period that we utilize. That is different than the simulator. The simulator has a similar kind of input, but then it's adjusted for the interest, for these economic factors and the Cedric chart view. This is a different kind of an algorithm than Outlook. So that's why you see a difference in the curve moving forward. They're similar, but that's why they're different, because Outlook doesn't utilize the economic factors.
Right.
So that's the difference between the two charts.
Right.
And the algorithm that is showing what the future could be.
Back up one chart there again, Tommy. Okay, now if you took the factors and said there's a NA or don't use the factors, if you set them all to NA, that blue line, which is the forecast, would basically be flat for the year. In other words, it's taking the price movement up and down over time, but if you don't put any economic, I'll call it fact or economic input onto the price, it should be flat for the year.
Right.
Because there's nothing telling it to change. But if you take these 7 factors and you say this is what's going to happen over the year, it's going to move up or down based on the factors. If interest rates go up, that's bad for the market, right? Interest rates go down, it's good for the market. So it takes that into consideration when it looks at the. So here, are you flat? Yeah.
Yeah, I put interest rates up. So interest rates up. Then you
generate forecast. You got to generate.
Yeah, I did. That's what you get. But if you go flat, now you see that it moves that blue line.
blue line up.
Made a big difference. Huh.
And that brings up a point, a question, Ron. Do I need to add a NA to all of these? Because right now I've only got up, flat, down. Same thing for unemployment.
Well, yeah, the NA means you're not using that factor.
Yeah, so I need to add a NA to it.
Don't know why you would eliminate it, but just sometimes you like to do a test. What is the impact of interest rates by
Okay.
itself? I mean, you could,
Just by itself, right?
right, you could find out what it is. So,
So how are they weighted?
what do you mean? How are they weighted?
That's a secret.
Okay, that's part of your secret sauce. Okay,
That's
that's
the
fine.
secret sauce.
All right, that's fine.
Well,
But-
that and you know, and the presidential one, there's been a lot of information published on what happens each year in a presidential term. Okay.
Oh yeah.
And that, you know, that's built in here for that particular factor.
Okay.
Yeah. So, but I will say this, because I say it's a secret. I reverse engineered as
Right.
best I could what Ron had done. And then I called Ron and I said, these are the factors that I believe they should be. And we tweaked them a little bit. So, but it does go back to the, in the case of the tweaks for the economic factors, it applies to them the same way the classic version of Visions did. And in Visions, this was a separate module that you had to get. Ron did not have it bundled in with the with it like we've bundled it into PyVisions.
Right. Okay.
Okay, good questions, and it leads us off into different directions as we over answer things. All right, PyVisions, current version 1.5.19. We pushed out 45 different versions in the last 4 weeks. Yes, we're down from the 90 something we did the month before. Okay, but still we're averaging about one release, a little bit better than one release every day. We added 2 brand new tools this month. Spread Planner is a full planning module for multi-leg spread trades, which includes iron condors, credit and debit spreads, with chart previews and strike guardrails that have been built into it. And then we added the ticker profile, which gives you a quick narrative on any ticker. Both of those went from 0 to fully featured in about a week. And we caught and fixed a real bug in how the days to expiration was being calculated. It was overcounting by a day for most of the trading day, which could throw off the cascade timing decisions that we have built into trade management. And so we verified the fix directly against Fidelity's numbers before shipping that. And it now flows through the trade planner, the option engines, and trade manager's weekly gate. On the probability of assignment side, we fixed a crash that was happening on thinly traded tickers. Those were throwing errors instead of just showing you what data was available. So we added a visual indicator so that the blank P of A cells are clearly flagged now instead of looking like missing data, like being blank. There's a question mark there. And there's a hover feature that reveals how many days are in the search with the required 252 days being needed. Trade Manager picked up a new fee mode, better position stats, and some ledger integrity fixes so your records stay accurate through your rolls and closes. We tuned up the cascade logic by adjusting the days to expire floors and added delta gating on the later rungs to sharpen the strike selection. So that's the first time that we've introduced looking at delta as a part of making trades decisions moving forward. it previously and still does has P of A built into it. We've got more improvements underway, which is in a local testing that I have running on the local server, which has introduces a matrix style decision process, which was already built into the put management. We were now rolling that into the call management side. I expect that's actually in beta testing right now, and then I'll probably push that out later this month. We reorganized the dashboard layout some. Trade planner and trade manager now sit side by side, and we cleaned up where the fee schedule and settings live. So that's less cluttered. That's also there on the dashboard. And on the security side of things, we fixed a data isolation issue that could let one user's session data collide with another's. Thank you to the two anonymous people who were on the session today that helped with that. It turned out it was limited to the fundamental search, and it was not evident in any of the other engine modules. So that's closed now, along with some other hardening work that we did under the hood. So quite a bit of stuff that's taken place in terms of moving that forward. Any questions on Pi Visions and where we're at? If not, then we'll get to the demo side of things. And what we wanted to demonstrate today was Trade Planner. So just to show again, this is down here. We got Trade Planner, Trade Manager. We talked about Trade Manager last week or last month. Now we've got Trade Planner. There's the Spread Planner button, and then eventually we'll have a Spread Manager module. Haven't really worked on that very much, but that's the direction that we're headed. So Trade Planner, you click that and it opens up to Trade Planner for you. And what I thought that we would do is I would take the email that Ron and I have, and every time we run the black box on Friday night, I get this email results system that comes out, and it emails it to Ron and I, and so it highlights for us the tickers that are in a buy and a whole buy state. This is on the trade alert candidates, and then we actually see the black box at work finding new returns, the optimization process, and so we get a view at that to see how many tickers have been re-optimized. If they and this also includes not only the ones that are going through the normal wait and rest process, but if they're older than 6 months old, they also get automatically optimized. So now we know that moving forward from this point, we're getting new symbols. And then here's the ones that are in the buy and the whole buy. So I'm going to copy those. And
Okay, Tommy,
yes,
just, I want people to be aware, this is a fundamental list that we have about 150 tickers in our fundamental list. So you say, why did you only get this many? Well, we've already cut back and done a pre-sort on the list that we're looking at. So it's not all the stocks in the marketplace. It is those that pass a set of fundamentals that we're using to do selections. So it's our list of about 150. This is the result of processing that list.
right. So I copied from that email, and then I put it up here into the add multiple ticker list. And then I tell it to create the multi-ticker plan. And it's going to go pretty fast because you'll notice here, market closed, cache data. So when the market is closed, anytime any user puts in a ticker, it stores that in a local file that then the program utilizes. So it checks to see, is there a local file? If there's no local file, then it goes out and gets to fetch. If there is a local file, it uses that local file. So that's why it's real fast. Otherwise, it's still relatively quick for this long of a list. And from here, what Ron likes to do is, well, before I get to what Ron does. So the first thing it's doing is that it finds the next expiration, and then it looks to see what's the first strike that's in the money or at the money. And then, so there's a little algorithm that it runs to check to find these strikes. So it gives you some kind of a starting place in terms of what's the next expiration and what's the first in the money or at the money strike for it to feed up to you, okay? And you've got the ability to change these, and we'll cover that. So the first thing is having a baseline of expiration and in the money or at the money, sort by return. You got a button right here. We're going to get these in return order, and it is based upon the percent sold category, which is shown in the upper box line here. So you can see those numbers are decreasing, and so it's sorted by that. Now you've got the candidates that have the most premium. Okay, well, of course, SOXS, which we know is a leveraged ETF on the semiconductors. We know that that's going to have a lot of premium, and you can see it right there in the 6.59 return. You notice that this information button here is green. If you click on that, it'll show you the bid and the ask, the spread difference. That's the difference between the bid and the ask, and what that spread percentage is. You won't, though, when I say you want it, it's more of an informational purpose thing. How tight is the bid and the ask spread? We've talked about that over the years. And then you get an indicator of what the open interest is and what the previous daily volume was for that particular strike. So you can see you've got reasonably good open interest and volume. It's a tight bid-ask spread. It gives it a green indicator. The other thing to check here is a little button here. You hover over it, it tells you show VTAM chart. You click on that, it goes out, it gets the chart, the VTAM chart for you. You don't get all the legend information that you do under the chart engine, but you get the image, and the image is what you're trying to see here. So we know SOXS probably is a good candidate for the trade alert. So I'm going to put that in the plan. Next one is Nugget. Nugget, I don't want it in the plan, but it's gone up. It's now over our $150 limit that we like to have in our trade alerts. So without any looking at things, I'm going to kick it out just because of price. ACMR, I've got a yellow button here. Okay, that's more of a warning. So I click on that. Okay, I see I got a 23% spread. I don't have very much open interest, not much volume. You know, that's probably not a good candidate. Yeah, sure. I got a good premium. If I want to, let's see what it is at a different strike. You choose the strike here, and I can see at a glance, I got the strike, I got the bid and the ask, I've got the best fit symbol, and I've got the P of A, the probability of assignment. Well, you know, there's the lowest diamond, but I got some 3 stars. Let's just take the lowest 3-star. So that's going to be a 1.18. Notice my indicator's now gone red. Open interest, none. This is not a good candidate. And the spread is huge. So that the premium indicator by color, that's a pretty good tool to utilize and tap into. Next one, I go to B. Okay, I got a 2.45% return. What we like to do is kind of target a 1% return. So let's, here again, I want to check for strikes. I see that 46 has got a 3 stars. P of A's 32. Not too bad. Oh, wow. Look at this. Now I've got a lot of open interest, a lot of volume. The bid-ask spread, though, is 21%. But that's not too bad. 45 cents, and you're looking at some reasonable numbers there. So that's a pretty good candidate, I'll say. I'll put that in the plan. Keep working our way through. Hopefully I'm not going too fast. DEC. I got a red button here on DEC. I've got a pretty good return, 3 stars. What's the chart look like? Oh, look at this. I see lower highs. I see this is clearly in a downtrend. Look at the 50-day moving average. It's going down. It's tracking along down here. Sure, it bounced back into the V. And this is the second lowest low. Is it, I don't know if it's a good bounce, but it doesn't look really good. And sure enough, not much volume, wide bid-ask spread. That's not a good candidate. So DEC's out. Okay, I go to lift. Probably, okay, now I don't have a diamond or don't have 3 stars. This is telling me the best fit, that the return matches the if expired. Well, I wonder if there's anything for the if assigned. So I can click here and very quickly I could see there's the diamond. Okay. Well, that's just 3 cents more than the current price. All right. Let's see what the chart looks like. It's just hovering along here on the buy limit. That looks like a pretty good thing. We've been in lift quite a bit. And we've got open interest and volume in the hundreds, and the bid-ask spreads about 20%, 21, not bad. So I'll put that in as a candidate, but you notice that that diamond comes with a pretty high return. And we were successful this past week with lift by being in the money. So I'm going to leave that back as in the money by a strike, and I'll take the 1.09. It's in the plan. And now ConAgra, CAG, we've traded that before. Oh man, that's a low return. Probably not too good. Okay, there's a diamond, 1.64. Oh, we went to a red. I mean, now I got to look and see. Got plenty of volume, but man, look at the spread. Even though it's 10 cents, it's a 50% spread. That's going to be hard to get filled. Even though there is liquidity there, that's a wide spread. So I would say I'm not interested in that. So now I've got these, as I've gone through, I put them into the plans. Now I'm going to sort by plan. Now I've got all my planned trades. It just so happens that we've got 3 of them. If we had clicked another one, let's just say we'll put CAG in the plan, sort by plan. there it is. What you do now, all right, let's just delete them. The delete function works only on the lowest row. Can't delete somewhere in the middle. So you'll always need to sort by plan to get those out of the plan to the very bottom. You can still sort by return. You sort by return, we get CAG up here. Take CAG out of the plan, sort by plan, it goes back to the bottom, delete the row. All right, now we've got it sorted by return, and we're only dealing with what's in the plan. Happen to have 3 trades. We tend to do our puts on our leveraged ETFs. So I'm going to sell a put. You notice that there's a little bit of different nomenclature than there was a month ago. Now we have sell a put, and this is a cash secured put. CS means cash secured. Or you could sell a put, which is margin secured. We now have a margin percentage indicator up here. So you can change that. So I'm going to change SOX to our cash secured put. Notice now we get the put factor, we get our returns. And so now we're looking at those. What I don't have here is the return. And we like to target about 1%. So you have to do a little bit of trial and error on it. So I'm going to use the P of A as my guidance. We like to have low P of A's. I know that these diamond, that's going to give me the put factor that we're looking for. I'll start here at 38. That's a little bit less than 1%. I got a red thing here. It got over 100, but pretty wide spread. Maybe I should go up a little. A P of A is not too bad. I still got a wide spread. Volume went down quite a bit. That's up. So maybe between the two, which is the better, you can decide what you think is the better. This one's got a little bit tighter spread, a little bit more volume. The P of A now is less than 1, textbook case. Return's not quite there, but I'll take that. All right. So what we're ready to do now is to sort by in plan. When I do that, it puts my covered calls on top. It puts the sell put on bottom. And now what I need to do for the trade alert is to position size. We like to position to be about 10,000. And so I just have to just keep clicking that until I get to the 10,000 number. And click the arrow up. There's 11. And I already see the numbers down here, but I like it to be up here. So you touch the cash available. You see we've got help kind of built into it. Just hover over these items and it'll pop up. Click to fill the cash available with the summary tables, total cash required. Click that. All right. So today's trade alert for everyone. There it is. Copy that to the clipboard. Now it's on the clipboard. And from there, I bring up the trade, the information, and I paste it to the presentation slide. And now I've got my information there. The only thing else left to do is to save it. And when I click on Save Plan, it's no longer the plan. Now it is Trade Alert. And this is the Trade Alert for the 24th. And I save it. Plan successfully saved. And that, my friends, is how Ron and I do it.
Okay, one thing anomaly there, Tommy, is puts. Profit of zero. What something is not right.
Okay.
Premium received. Hold by cash secured. Might want to
I'll put-
click the F button and see if it changes it.
I don't think it
The
will.
fetch.
I don't think it will. It's not a fetch problem because
Okay.
it's got the data there. Let me do a recalculate. See. No, that doesn't pull it up.
Hmm.
I got a bug there. I got to fix that. Yep. Because see, it doesn't even show the premium received.
Right, which would be 105,
It
right?
should be 105.
Yeah. Hmm.
See,
10.
premium is X shares fee netted with when fee mode is custom. So I mean, you got the secret. We got the secret sauce in here. So
So it's the adding up of the
it's not. It's not. It's not.
it's not bringing in the
It's not
105,
grabbing
but the
that,
other one
pulling
is
that down.
110. Where's the 114 on lift?
Yeah, that's the other thing. I've got.
It's okay. I'm
Gotta
glad
add
we're
that.
doing this. We're finding anomalies.
Yeah, but it did get the cash required and the option signed value. Those are correct.
Right.
Okay. And that's what's in calls. Calls.
I'm just impressed with how much this interface seems a lot more intuitive, and I think that's really great.
Thank you.
Well, and the thing that we thought was it's how you use it. It's the process, the path that you take to add things to the plan, sort it and look at it again, look at the chart and decide, okay, is that a possible candidate? If not, throw it away and keep looking at what you got. That's the key to the whole thing. So that's why that trade planner is so important. And I wanted to point out earlier that list that we use is only 150 tickers. I mean, there's the S&P 500. I mean, just think of what you could look at if you have the time.
Yeah, that brings up a question that an anonymous user asked, which I don't remember if they're in the meeting. I think they are. So you say, hey, how do I get a list? Well, it's back to the fundamentals. That's where it all starts. Now, I've got the Dow 30 populated already, but you can get the if you go to the list manager, you can get the Dow 30, you can get the S&P 500, you can get the NASDAQ. And by clicking those are cumulative, okay? But let's just say you got the Dow 30, you can save that list, and that's what I did. I saved the Dow 30. So I've got a list in here. And so now I can say, go get the Dow 30. It's already populated there. Generate the fundamentals. And I was on the phone with Ron and I said, you know what, this goes fast enough that we could actually do this live during the meeting to kind of give you an idea of how can you find those buys and hold buys. That was the email question that the anonymous user had. How do you find them? Well, you start with a list and then you go out and you get the fundamentals on that list. And as you can see, it doesn't take very long for it to grab those 30 fundamentals. And that's going to give them all to me. You could sort it if you wanted to, but now the sort the sort order isn't really what I want. I want to see the state. So here's the buys. There's Walt Disney's in a buy state. And then let's change it and see the hold buys. The Dow 30's got no hold buys. All right. Well, what are the ones that are in a wait? Because they're going to, at some point, they're going to become buys, because that's the next state to be in. So you've got a pretty good list of ones that you could put onto a watch list that you could say, hey, where are we at? You got to, my screen's a little too tight. So you got to scroll to get this last column. Quarterly earnings. Oh, wow. Here's one with two down quarters. Merrick and Company, pharmaceutical. You could also just say, hey, look, where's the best fit candidates? Now, the best fit is not just these fundamentals to the right from the book, but it also includes the buy rank. So the buy rank is telling me that it's in a reasonably good state to be looking at or to be watching. So Travelers, TRV may be good. So that's how you can get a list. Then you can export it as a CSV, export the tickers. You can send this list to the list manager. So you've got several things you can utilize to get that list up here in a saved list that you're then using all the time. Ron mentioned it, so I just couldn't help but kind of bring that up and show you. Yeah, there's and so yeah, you do that for the S&P 500, and it'll take you about 15 minutes. You can go have a cup of coffee, and if you live downtown and you in a condo and you got a Starbucks beside you, go get a Starbucks and come back and
Get charged up.
Not that I'm promoting Starbucks. I am not a user of Starbucks.
They burn their coffee beans.
But so yeah, that's a way to find those buys and hold buys on a big list. Easiest thing to do is to run that through fundamentals. Charles, did we overwhelm you? He's muted. Okay.
Yeah.
Oh.
Hey, Tommy.
Yes, sir, Scott.
Yes. Good morning. No, that's very good. It's coming along really well. I was wondering, so when you're doing your charting, at what point would you use Outlook? Like, when would do you ever use it? I keep struggling with this. I use it every time, but I just don't know if I'm using it properly, the information I'm getting. If it's a buy and a hold, but if it's going up or down or flat, do you incorporate that into your decision making at all?
Well, I think the key on Outlook is, excuse me, when you find that, it may be a new symbol, a new company that showed up, right?
Yes.
So now, what is your knowledge and history of that company? Outlook just kind of gives you a quick kind of, piece of information that says, if it's going down, it says, be careful, look at this, okay? You better study it because you haven't had this one in your list for at all, okay? Those companies and stocks that you're familiar with, you kind of know what's happening to them, right? You have enough knowledge that you're watching Apple all the time, and when announcements come out, it's probably going to go up, maybe go down, but you're aware of it. But sometimes a new one, Outlook gives you that first feeling, okay? Is this something that might be a good opportunity? It's just another little piece of information. If it's going down, it's kind of a red flag.
Right,
Do
right.
more
Okay.
research.
Fair,
think-
fair enough.
Okay.
Now that makes sense. Thank you, Ron.
Yeah.
Okay, so what I hear Ron saying and is that you just saw, in essence, a walkthrough of how to produce the trade alert.
Yes.
Ron and I did not look at Outlook in that normal workflow because number one, whenever we do look at the yeah, now you're seeing the text from my wife. What you do would, if we were to see something kind of going down, we'd be looking at Outlook at that, but we eliminated those downtrending tickers as we walk through the due diligence process. Okay. So,
Yes.
so since we were looking at stocks and equities that were in an uptrend, we didn't necessarily look to see what Outlook does. Now, having said that, I'll answer your question in a different way. When we manage positions, so if you go into Trade Manager,
Okay.
Trade Manager does look at Outlook and it looks to see whether the price at the strike that's under consideration, is it above the current price or below the current price? Okay. And let me show that to you because it's let's see, I'm not sharing my screen, am I?
No, not right.
Yet, no.
Yeah, let me get back to screen share. Okay, so if you go to Outlook, you have this option evaluation tool. So you have the ability to, and it defaults to the next expiration.
Okay.
Okay. I can, let's say that I'm thinking about doing a next monthly covered call on Apple. Apple's in a wait state. Okay. It's in a wait. It's basically going to go sideways, kind of. But let's say that I go way out. Okay. So I've gone a month out. It's at 301 and a penny. So way out here in September, it's 301 and a penny. So here's my current price.
Okay.
So it's going to be below the current price, according to Outlook. It's
Okay.
showing a lower price. So that gets factored back into the algorithm that is trying to manage the position, if you had a position in Trade Manager. So when Trade Manager starts planning, let's see, those aren't good. Let's see, maybe, let's see, these aren't updated. There's basically nothing that's going to GSK close. So I need to update that for the closed position. It actually, you can see it's at 52.41 and I was at 52. So the position's closed. It's tentative call assigned. We know that the call did get assigned on GSK, but there would be a plan next trade button here.
Okay.
And whenever you click that, part of that algorithm goes out and it looks to say, okay, a week from now, because that's the way this defaults. What is the outlook is it up or down? And if the outlook is up, then it starts looking at at raising the strike.
Raising the strike.
Raising the strike. So in the mode of trying to manage positions is when I tend to look at outlook, and I don't tend to look at outlook as an entry tool. I tend to look at outlook as a management tool. So that's why I built outlook being incorporated in the planning of a next trade.
Got it. Okay.
I should have tried to say that simpler earlier, but so that's where it gets built into managing of trades, because then the longer you're in a trade, it's kind of like, what's the chance of recovery? And then that's when outlook is probably the best tool, the better tool. And then for SpaceX, you see there's not enough data for the fallback regression. So you can't get it. What's another ticker? You're good at coming up with some of those.
Oh, the bad ticket.
What is ASTS?
ASTS or
Yeah, ASTS has been trading for a while.
and then
And now
yeah.
it's been there for long enough. But let's say that I bought ASTS back here. Now I'm trying to figure out what's the likelihood of a recovery. Now I'm going to look at outlook. Okay, outlook tells me it's probably not going to recover anytime soon. So,
so would that influence you making that decision where it says hold by, or do you just maintain your stop losses or whatever your rules are?
yeah. The other thing is that this starts showing me that it's going to hit the stop loss, sell on loss out here in the outlook period. I'm not too far from actually hitting that. So it's going to tell me, hey, I might ought to just go ahead and close this position and take the loss, because in the next 2 months, 50 trading days, that doesn't look, yeah, there's a little peak here, but everything else is falling off.
Right.
And of course, this wouldn't have even passed the trade alert criteria, in that the 50-day moving average is going down. So,
Got it. Okay.
You may have.
See, and the other point here is when you look at this and say, okay, it's telling you it's going to go down. I don't know how far what your break even is, but this might allow you to sell a call deep in the money here to get taken out.
Okay. Yeah.
In other words,
Okay.
calculate, okay, what's break even and where does that strike get me out? Maybe I lose a little bit, but if it's going down, okay, your call is going to expire, but you've got a lot of premium to work with them versus waiting, picking a strike that really doesn't have enough premium and it goes down anyway. So it's kind of giving you the opportunity to pick a strike to get you closer to break even.
Got it. Okay.
And just to let you know how we built the tool, so that you didn't have to be choosing strikes. You just chose an expiration.
Okay.
And then it tells you the P of A for that expiration using the current price. Okay. So there's only a 50% chance. I mean, let's get some time out here. So now we're looking out here in September. It's saying outlook price 64. It's at 68. And I've got a P of A of only 45%. So 45% probability of assignment. And that's using the current price. You'll get the exact one for your strikes whenever you go to the call search engine. But here, outlook factor. Going out to September is, I don't have the days to expiration here, but that's 40, no, it's about 30 days.
3
It's
weeks,
it's about 30 days, 4 weeks.
4
Okay.
weeks.
If you go back 4 weeks, how well did the algorithm project this price? 85% confidence. So the algorithm, so I'm looking at a like a confidence factor. It's actually a correlation. We just called it outlook factor, but the correlation of the outlook algorithm going back 4 weeks, if you ran outlook 4 weeks ago, it correlated at an 85% level of this price. So to me, that gives me a confidence that the algorithm is working over this time period.
Okay. Got it. Okay. No, that makes sense. I always like my cost basis lower, I'll do outside of the cost basis. But if that's true, I guess I'm looking for the confidence, right? I'd be happy to do that trade knowing or feeling that's it, just take advantage of the downtrend
Yeah.
and sell below the money.
Yeah.
Call, calls.
Let's capture this slide so next month we can go back and look at it.
Okay, I'm game.
Well, I've got one stock that I have traded for years, and it is down right now from what I paid for the stock.
You want
I
to tell us
rolled-
that? You want to tell
I
us
rolled
that
out-
anonymous stock?
It's anonymous. I rolled out a covered call 2 months out. I feel that stock, knowing the company, and that ultimately will return, and I'll end up at least breaking even on it. And I've made enough money off of what I've done with it. Even if I sold it for less, I'm still in a profit position.
Yeah.
And the one thing I do is I look into what a company does before I trade it. It's like Dyson Foods built a plant in Salt Lake, a huge operation for butchering beef and pork. They just laid off 790 employees and they're closing the facility because the price for beef and pork has got so high, they cannot run the plant profitably. And unfortunately, I know enough about the paper industry that manufacturing nationwide is down. 2 of the mills in the Pacific Northwest have completely closed, and a lot of the other mills on the West Coast that process corrugated aren't taking any scrap right now because they have enough done and they have no orders to sell their paper. So when I'm trading anything that is in the manufacturing industry, I take the time to study the company before I do the trade. That's part of that and technical analysis is part of my babysitting service that I do for myself, and it has worked out really well.
So let's see if we can test your theory here on Tyson's Foods. So there's the information on what they are, what they produce and everything. Okay. All right. Fundamentals. Okay, so there's the growth, 2.9 quarterly earnings.
And they claim that they have lost millions of dollars on the facility here.
Yeah, so market cap, let's see, they've got bare cash. They got a lot of bare cash. So that's interesting. I want to go to charts, TSN. Where do we go back? Oh, well, okay. We've got a position. It's kind of going sideways down from here. I'm looking, okay, so last trade made 11%. The 12-month with the factors is 23%. Last optimized was May of this year, so we're pretty close on things. Sell and gain and loss to let you go quite a bit low. The squeeze is trying to work to get you out. It's above the V. We added a candlestick tool.
I love candlesticks.
There
I
we
think
go.
we did that last month.
Mhm.
Anyway, so now we've got a 3-month daily candlestick. Doesn't have the VTOM buy sells, but you've got the ability now to look at candlesticks. And then here, straight to Outlook, I don't have to back out and go. So now I can look and say, what's Outlook show? Outlook shows, hey, Bob, you're right. Look at that. It's going down.
Yep.
So write that deep in the money call if you own
So,
it.
okay, there's a on the fly good little example.
Great pastime.
There we go.
Well, you're learning new tricks, I'd say. All right. Last thing, I know a lot of y'all have asked and talked about getting together for a seminar. What matched up with everybody's input was the 12th and 13th of November. So I'll try to get down to the hotel this next week and try to finalize.
How much money we're spending?
Yeah, find out how much it's going to cost, and then get back with y'all as to what that price is going to be. But
Hey, good stuff. Thank you, everyone.
Mhm.
all right, we went a little bit long.
Tommy, Ron.
Started late.
Well, thanks for your participation, and that's how everybody learns. That's
We
the
appreciate
objective
it.
here, is to
Yeah.
Okay.
allow you to make
Thank
better
you.
decisions.
Okay, guys. God
All
willing,
right.
see you next month.
We'll see you next month.
Right.
Take care.
Thanks.
All right, bye-bye.
Bye bye.
Bye.